Hello everyone. Welcome to this lesson. In this lesson, we are going to be learning a simple trading strategy. All right, very simple and powerful. Now, this strategy is based on three basic things. Number one, the strategy is simply a break and retest strategy. So we'll be looking at how we can analyze. We'll be analyzing the market, and then we'll be looking to take a position in the market. But before then, let's look at the introduction to the strategy. So the strategy works like this. We want to see a clear price movement to the upside, and then a violation of previous lows, creating a previous high, then a retest. All right, so we want to see a retest of previous structure. All right, now one thing I want you to understand is the concept behind this. All right, so once we see the price movement like this, forming a high, and that high becomes what we call a resistance, and then the resistance is broken, and then the price comes back, retraces back to that resistance, and then we'll be looking to take a trade right on the spot. Okay, now the concept is simple. In trading, there's what we call support and resistance. A previous area that was resisted, being broken, becomes a support. Now look at support and resistance as a ceiling and a floor. All right, now look at this as a ranging market, but look at it as a ceiling and a floor. So at the top here is what we call the resistance. Then at the bottom, this is what we call the support. All right, so anytime the support is broken, retested, it becomes what? A resistance. Once the support is broken, it becomes a resistance, and when the resistance is broken, it becomes a support for the price movement. All right, so price will always flip within these two areas, support and resistance. So in this strategy, basically what we need is an understanding of support and resistance. So we'll be using let me just write it out for you. Basic things that we are going to be talking about. We're going to be talking about support and resistance. Talking about higher highs and lower highs. Okay, we'll be looking at these areas to take our trade. We're looking at trend lines, and then we'll be looking at candlesticks. All right, so these are the basic things that we need. So for us to take a trade, we'll be looking at the levels in the market, we'll be looking at the highs or the lows, we're looking at the trend lines, we're looking at the candlestick. But first of all, we must determine the trend. So let me add that here. We'll talk about the trend. We need to know the trend. Very important. What is the trend in the market? Is the trend going to the upside, creating higher highs and higher lows, or the trend is to the downside, creating lower highs and lower lows, or the market is ranging at that particular point? All right, so I'm going to be teaching you how to trade this market right now. So the strategy is simple. First of all, we determine the trend. So for example, the trend is up in an uptrend. We're looking for higher highs, and we're looking for the retracement to form the higher low. So this becomes our higher low, and then this becomes our higher high. All right, this is the higher high, and then this is the higher low. Now, how do we know that it's the higher low? Remember, in our candlestick lesson, we talked about multiple weak rejections in an area like this. But you see rejections here, and it's tallying up to, take your Fibonacci, and it's tallying up to 50% of the previous move. Then we can say it is a retracement. Remember, the market will always move with an impulse and then retracement, or we'll call it a pullback. Right? So the market push, it pulls back, it push, it pulls back. Now, having determined the trend, that the trend is an uptrend, the next thing we have to do is that we need to wait for the previous high to be broken. So automatically this becomes our resistance. Alright? So in an uptrend, we are looking for the break of the higher high, or what we call the resistance, then a retest before we take our position. So we're waiting for the market to push above this level to tell us that it is continuing the trend up, because the trend is your friend and you must trade with the trend. So once the higher high is broken, we wait for the pullback. This coming back of the price is what we call the pullback, or you call it a retracement. Any of the language you use, it's okay. Alright, so once you see this pullback, then we'll be waiting for price to give us a confirmation signal here of multiple weak rejections. Then we take a position of buy. We take a buy position. Alright, we put our stop loss below this level. Then we take, maybe depending on the risk management plan, you take a 1 to 3 or so, and then you see that the price will now move in our favor, creating the trend up, and then boom, we hit our take profit. Alright, so at the end of the day, we have made money trading. So this is what the concept we are going to be trading. This is the first concept, and then you can see the trend to the upside. So we can put our trend line to get it. Alright, so this is the concept we are going to be working with in an uptrend. Then in a downtrend, same thing we are going to be looking at in a downtrend. In a downtrend, what we're waiting to see is the market creating a low and then a high, the previous low being broken, which is this point here being broken, and then we wait for the price to retest this place here, which becomes our basis to take a sell, because we must always sell high and buy low. So we wait for the pullback of the price, and then we take our sell position, and then we make money down. So at the end of the day, we take our position there, stop loss above structure, and then we target some of these lows. We target the next low. Alright, then you see that the trend is down. The trend is your friend. You must trade with the trend. Alright, so this is for a sell setup. Now the next thing we want to look at is, for example, the price is ranging. Alright, so when we see the price ranging, meaning it is bouncing from ceiling to the floor, from ceiling to floor, ceiling to floor, just like this, without a clear direction. What we do is just we highlight the resistance and we highlight the support. And what do we wait for? We wait for a clear breakout, a clear break and retest of the structure before we take a position. It either breaks to the upside clearly and then come back to retest the resistance. It becomes a support, and then we take the sell, we take the buy. Or it breaks down to the low and then retest it. We must wait for it to come back to retest it before we take a sell position. This is where Forex needs patience. Remember, we're talking about support and resistance. When there's a level like this and price moves and breaks it, it becomes a support. Alright, so this was the previous resistance. Maybe price was moving like this, came back, moving like this, came back, and then finally the price breaks it and retests it. The flip of this place was once a resistance here, but what price finally broke it and then came back to retest it. This retest converts this place to a support, and then we can take a sell, a buy position here. We can use limit order. Remember our limit orders. We can use our sell stop. We can use any of those things we want to use, and then we take a position here, and then we take a buy position. The same thing with our sell. For example, price came to this place once, could not break it, came again second, could not break it. The last time it came and it broke it, and then it comes back. We must wait for it to come back to tell us that this place is strong, and then we'll be looking to take a short position down. So from here we can take a short position, stop loss above structure, and then we target some of these lows for the trend to continue. Remember, the trend is your friend. For the trend to continue. Alright, so this is it. So the last concept I want to talk about is when an uptrend. Now we want to talk about trading reversals. When the market is about to reverse, how do we do that? For example, we see clearly that the market is moving to the upside, creating higher highs and higher lows, and then market creates a high and fails to break above it. Rather, it breaks the previous low. Once we see this, we know that the market is about to change direction. So what do? We take our trend line and we take all the lows. Alright? And for the market to have broken this low means that it has a new direction, because this is the price channel it has been moving, which is uptrend. So we wait for a pullback, at least 50% of this previous move, and then we wait for the new low, a retest, before we take a position to sell. Alright, so we'll be taking a position here at the price pulls back to confirm that the trend has changed and it is going down now. So we'll take our sell position here, because we sell high and we buy low. Then we'll be targeting some of these lows, and then the price could give us a new low. At the end of the day, we have a trend to the downside. Okay, this is simple concept. Alright, so and also for an uptrend, for a downtrend, the price will be moving down, creating lower highs and lower lows, lower highs and lower lows, but the price fails to break above its lows and then creates a high. Once this happens, we take our trend line and then we take our trend lines and then connect the lows. Alright, then we form the channel. Okay, price will be moving down, then failing to break above this place, then there must be a support here. So what we do, we wait for the market to come back and tell us to start creating a new trend, creates a high and then goes up, and then we're looking to take a trade here, 50% of the previous move, and then we can take a buy position, stop loss below the structure that has created, and then we can target some of these highs, and of course we have a trend to the upside, then the price moves in our direction and we have a new trend. See the concept? So these are the areas we are going to be trading. This is the strategy. This is what the strategy is all about. So we must know the trend and then be able to spot where we are in the trend and then take our position for buys or for sales. So looking at this chart right now, let's look at Euro GBP. All right. So on the 1 hour time frame, we can see that the market has been pushing to the upside. We see that first of all, the market to trend was down. We can connect the dots. We can say the price was down. All right. You see the touches here, to the touches here, to the touches here. The trend was down. It's a live example. And now you can see that after it created this high, it broke above it. All right. And then you see the volume indicator is up already, telling you the trend has changed. Well, we're likely to have an uptrend. So what we expect the market to do is a pullback to some of these lows, and then we'll be looking to take a position 50% of this previous move. So this is an area of value where we can be taking a position, a long position for a buy. All right. So as it moves like this, then it creates the trend. It has to create the trend to the upside, just like that. All right. So basically, our price action is very important in recognizing some of these levels that we're going to be trading from. Very, very important. All right. So on the trading view, let's look at what price I'm doing here. You can see that on the 4 hour time frame, the price here was moving to the downside. You can see it was creating lower lows, lower highs, lower lows, lower highs, lower lows, and then it creates a high, it creates a low, it creates a high, it creates a low, it creates a higher high, a higher low. What do you expect next? A higher high, of course. So the trend was down. Sorry, the trend was down. And then trend was down like this. Okay, you can see the zigzag movement, and then it creates a high. So it pulled back, and now we're expecting a higher high. So we can just simply say, okay, all right. So we can simply say, okay, this is, take a Fibonacci and take this level to this high. All right. So we can say exactly this is 50% of the previous move. 50% is here. 50% is here already. So we can say that normally from here to here is the first push, and then is the retracement, and then we're expecting a new high. So rather on this pair, Euro GBP 4 hours time frame, we're expecting a buy. Okay, we're expecting the market to buy. So how do we enter this market if we want to trade this market right away? What we have to do is two things. Number one, we can use what we call a limit order. We've talked about that before. We can use an instant entry. We can use a buy stop. A buy stop is we put a price level above here. All right. Okay, we say when price crosses this level, when price crosses it, we should enter into the market. All right. Or we can enter instant execution at this price, current price. We can just press an instant execution, and then we are in the market, and then we put our stop loss below the level, and then I take profits some of these highs. Okay, so that is how we can take an entry for this. So we can put our level here, stop loss below the structure, and then we target some of these highs. Because why? We can see that the price already at 50% of the current move. And then looking at the candlestick pattern here, we're seeing one rejection. So we want to see another rejection, and then we see that the price moves up. Because why? The trend has changed, and the trend is your friend. You must trade in the direction of the trend. And in trading the direction of the trend, you need to know where the trend is. Is it at the highs or at the lows? In an uptrend, where do we buy? We buy at the lows. In a downtrend, where do we sell? We sell at the highs. So this is already the low of the uptrend. All right, because the price has already started creating a new structure: higher highs, higher lows, higher highs, higher lows, higher low, and then we're expecting the higher high. This is simple and easy. This strategy works on every time frame. It works on every currency pair. It works all the time. So this is simple trading strategy I've taught you. You can go to your trading view and then do the back test. Register with them, and then you can use it to do back test, use candle replay, and all of those stuff. Okay, so I think this does it for the lesson. If you have any questions, you can write me, write the admin, and then you'll be attended to on time. So this is trading. It's simple. Take it simple. Learn these patterns. Go and backtest the candlestick patterns we talked about in the last video, because they're very important. Know the trend. Go and start drawing trend lines and see the price movement. If the price movement is not clear, you're not taking any trade. This is so important. Okay, all right, that does it for this video. Thank you very much.